Hey everybody, it's Jer. It's gonna probably sound echoey and loud in here. The last video was really echoey and loud, and so I apologize in advance. So I did a video yesterday, and I'm gonna continue to do videos. I want to talk a little bit about. Okay, so I tell people about what I do on with the stock market. I need to tell you how that all started and how I started learning about business and stock market. And people ask about how to do stock market, and they tell me it's so confusing, and I don't want to get in there because it's just too confusing, and I don't want to lose money, yada yada. And I want to help those people, but then I end up just repeating myself over and over and over again. So I'm gonna make a video and share this video with people who happen to ask, and then anybody who finds it, of course. Hopefully it helps. If you have more insight, which a lot of people do, I don't consider myself a pro. I'm not a financial advisor. This is not financial advice. This is just my own experience and what I know. And if you know something else, please feel free to add it to comments and share that with people, because knowledge is power. And the more people that are investing and getting into putting money aside for their future, and trusting in businesses and the growth of businesses and all of that, the better. It kind of helps everybody out. And I think that if you know something, share something. Share that thing you know. So I started learning about stocks back in middle school. This was back in the 90s. It would have been probably mid-90s. I would actually, on sick days, anytime I was sick, I would lay on the couch and watch things about the stock market. I would watch, I don't know if it was CNBC, but I would watch stock channels on TV and try to learn as much as I could about not just stock market, but businesses and how businesses are run, the leadership of businesses, and it was just all very interesting to me. But then the way to get in was you had to pay at that time, I think it was close to like $20 per trade to get into the stock market. So, and then I think plus a percentage on top of that. And plus I was in middle school, I didn't have money for all that, whatever, I just didn't want to deal with it. Since then, things have changed, and anybody, at least in the U.S., can get in the stock market using apps like Robinhood or Webull or any other trading apps. So, and with that, those fees have gone away. So you're not having to pay, $10 or $20 per trade, buying or selling. You can do it for free. And so that makes it so much easier. So I started learning in middle school about stocks, and in classes, it wasn't in middle school, this would have been in high school. We had a teacher. She was in charge of home ec, and home ec wasn't obviously a business class, but something she wanted us to learn and understand was investing. And she took the time out to put us on a project where we sold shares in a company, a t-shirt company, and to teach us about what was market cap, and shares, and kind of set us on a trajectory to be able to, once we were out of middle school, be able to understand markets better. I just found it very interesting. And then after that in high school, I had teachers and instructors who would put us on challenges to where we pick out companies that we thought were undervalued. And at that time, Ford was trading at it was like $5 or $6. And I was like, well, looking at their market cap, they should be worth way more than this. And so Ford was one of the stocks I picked, and they ended up going to like 12 and even beyond that later on. And I just, like I said, found it very interesting. Then my first job was working for Walmart, where I learned about how Walmart got started and how the CEO, Sam Walton, founded the company in a small town, Bentonville, Arkansas. And his goal was to start this company as a small company and gradually grow out and what is the word? Saturate these smaller towns in the U.S. And he would saturate and grow out gradually, building distribution centers, and then from those distribution centers, he would open up stores that those distribution centers would order or would deliver to. Back when we started, merchandisers, merchandise companies would deliver directly to stores and charge a fee, and you basically could only order so much, and because you didn't have like storage for it. Like, you might have had a back room, but you didn't have storage for all this stuff. He set it up to where he could get better deals on merchandise by buying in bulk. He would have these bulk shipments go to distribution centers, hold the product until a store needed it. Then he would deliver all this merchandise from different merchandisers to the store, which saved a ton of money and logistics. And he set up this logistics program that helped him grow Walmart to be eventually what it became today, what it's become today. But that's neither here nor now. While I was at Walmart, they offered investing in the company. You could put so much of your check into stocks. The company had seen so many different stock splits, which means that stocks are basically turned into two to lower the overall price per share. The company value doesn't go down, but whenever you have smaller prices on shares, it's more attractive to investors. So, or at least at that point, because there wasn't fractional shares at that point. So I would buy like a ton every week. And then eventually I sold it to be able to get Christmas presents, made a profit, and bought Christmas presents for people. But again, not really total, like part of the total story. The story here is that, or the thing of the video, the point of the video is there are I'm going to start sharing little tidbits of information that I know. The first tidbit is this. People will say, so you're an investor. I don't consider myself an investor, but I will invest in companies if I see a long-term potential for a company to grow much bigger. And a lot of times I'm more of a trader, and so there's a difference. There is investors who believe in long-term investment in a company that they're going to see a large return over a time. And then there is trader who is usually, honestly, in a stock for a day and then out. And if they see more potential in it the next day, they're back in and out before close. So their money isn't just kept in a stock. A trader, though, you have to keep your eye on the stock. You have to either keep your eye on the stock, basically nonstop, or you set a stop loss, which would be like if it goes down to a certain point, you sell and you're out and you're done. Good, whatever. So trading usually is more of a technical, like you pay attention to the technicals of a stock. An investor, you're more of a fundamental, like you see, okay, this company is invested in this, they're investing in their growth, they have great leadership, they have this catalyst coming, they have these great things that are happening. I believe in the company long run, I'm going to invest put your money in there, leave it, you're good. You trust that the company is going to do good with their money and with what they have planned, and you're done. You just leave it, and then you set a price target maybe, and you say, okay, well, this company is worth, this company's trading right now at $1.50. I looked at their market cap. Their market cap looks great for what they're doing. Market cap is like their valuation, where their value with where their stocks are trading right now, times the float, which is the amount of shares that are available to be traded. And you can say, okay, well, at this market cap, I think that actually they should be 2 or 3 times, maybe 4 times this amount. And so I'm going to trust my money in there until their market cap reaches this amount. And then you just do the math, and maybe it's, if they're trading $1.50 now and you think they're 4 times worth what they're at, then you say, okay, $6 is my target. If they have more gross stuff or whatever, maybe you change your target. If they have something bad that happens or whatever, you say, okay, well, maybe target should be a little bit less, and you can adjust that over time or whatever. But you're not having to watch the stock. You shouldn't have to watch, as an investor, you shouldn't have to watch the stock every day. If you don't trust the company enough to not have to watch the stock every day, get rid of the company. Trade it, sell it, because you, as an investor, shouldn't have to be worried about this company every single day. And if you are, then that's not a good investment. That's not something you should be invested in. The trader side of it, you do have to watch, and you do have to, keep track of it throughout the day. Maybe if you're not watching it constantly, then you at least are checking on it throughout the day to find out what's happening with it. And you're usually, like I said, in at a low point, out at a high point, and done. And that's okay. And that's trading. Trading, more reward in a short amount of time, but also more risk in a short amount of time. Because whenever you're trading, other people are probably trading that stock too, and they can get out at any point. And if they have enough shares, that can cause the stock to just drop drastically, and you end up getting stuck. And you don't want to get stuck. That's why you're watching this throughout the day for any kind of movements and understanding how that stock flows and what that stock usually does. And like I said, some people study technicals. I am not great at technicals. I can look at a graph, a basic graph on like Robinhood, and see, okay, this stock usually does this, or it's been doing this. This is what I expect, and I know for me when to get in, what's a good point to get in, and what's a good point to get out. I have made trading, and this is not the rule, this is the exception, but I have made in one day on stocks 300 or 400% of my money trading. I've also lost 20% of my money, 50% of my money trading before, and it's all just learning and getting a better understanding of what can happen. And so trading, more reward, but also more risk, and you have to be attentive. You have to pay attention to details. You have to at least have a basic understanding of what you're doing. Investing, you've studied this company, you've done your research, you know in your head what they're worth based off of, like I said, the float, market cap, what other companies are doing like them, how they compare to other companies, what catalysts they have coming up. Trading, you should be able to buy it, leave it. Buy it and leave it. You don't have to focus on dailies. It can be up and down, whatever, who cares? You know with conviction, this company is actually worth this. I'm not giving it up. I get it that it's dropping or whatever. And you know what? You might even be like, it dropped enough. I'm going to buy more. I'm going to get more because this company is worth this. And I have had companies like that where I'm like, this company is worth so much. This is like this is a great find. This is a great find. I'm going to get in whenever it drops, but I'm also going to tell everybody about it. And so, as an investor, yeah, that is perfect. So people will ask, that's the start. That's the base. Trading versus investing. Figure out what it is you want to do. This is your base. This is the start of that. This is, if I could tell anybody one thing, this is, you need to decide, am I going to do investing? Leave it. There's risk. There's risk in all stock market. There's risk. There is risk. Investing doesn't come without risk. Trading definitely does not come without risk. It's there. So you just have to decide, am I going to trade? Am I going to invest, or am I going to trade? And then go with it. And you can do both. Like I said, I do both. If I find a stock that I think this stock just has so much potential, like I said, I will just invest in that. And maybe I might even trade it a little bit. I might say, okay, well, once it hits this point, I'm going to go ahead and get out. I might buy more of that stock. I might buy another stock and trade for the day. And then at the end of the day, or the next morning, get back into this stock that I'm invested in. My investment, though, is something that I'm going to keep going back into that company if I'm trading, because I have faith that they haven't reached near their long-term potential. Or I might just say, okay, they're good. Like, this is really, really low prices. I'm just going to leave it. It's good, And I trust that pretty soon I'll be able to make a decent return on that, and I'll just leave it. And I don't consider myself a bag holder. Like, I'm not stuck in it. I want to be in it. So those are the basics. Before you ever get into the stock market, you have to decide if you are trading, which is like a daily thing, something you have to keep track of, or if you're investing, or you're doing a mix of both. And I will also say, if you're investing or trading, the worst mistake is to get in with like $1 and think, I'm going to be a millionaire off of this $1. Haha. It doesn't necessarily, it doesn't work like that. It doesn't work like that at all. If you're starting with $1 and you want to be able to grow that dollar to much more, you are probably going to need to start as a trader, but you need to know what you're doing. And that dollar can become $1.10, $1.20, and then compound your profits. But I don't think you're going to be waiting a long time before that dollar becomes a lot. So build up more money to put into the stock market. The more you have, the more you can make, and it's all percentages. So pay attention more to percentages than price. Learn what market cap is in a company. Pay attention to float, which is the amount of shares that are available. Pay attention to, if you're trading short interest, even I guess if you're investing short interest, which is like a totally other thing, but I wouldn't even give short interest a lot of mind to begin with. It's important, but it's not as important as the graph for the year, maybe even 5 years, month, whatever. Pay attention to the graph. Market cap, which is the worth of a company. Free float, which is the amount of shares that are available in that company. And then set a price target that you think the company is worth based off of your research. And do your research. Learn about a company. If you're going to be investing in a company, learn about a company. Even if you're trading in a company, you need to do at least like simple DD, due diligence, research to know what's going on. But that's the basic. That is the bare minimum start. And I hope to do more videos and hopefully teach what I know. And if something I say is incorrect, please correct me. So look at the comments and do your own research on what I'm saying. Maybe I'm way off. Do your own research. That's important. Research is important. Before you get into anything, do research. Learn what the stock market is for yourself, and hopefully what I've told you in this video is kind of a good starting point, and then just kind of go from there. And I'll be back and share more of what I know, and hopefully share more finds that I find as far as trading and investing. And then you can research those and do whatever you want with the information. Use it, don't use it, whatever. Hopefully it helps. If it doesn't help, it doesn't help, whatever. But I hope that this helps somebody or people get a little bit of a better understanding of the stock market. Okay, that's all I got. I love you all. Be sure to like and subscribe, and I will see you very, very soon. Bye.